we've been looking at Florida a lot lately. This is the Dallas housing market, and you're saying this housing market is about to get cheaper.
Well, look at the listings. Over the last 4 months, the amount of listings has accelerated exponentially. And there are neighborhoods where there are 15% of the homes vacant, according to Melanie Wright, who's a real estate reporter that I follow. She's put out a lot of great content over the last 15 years following real estate through the Great Depression. And we have these, and you got to remember, all the listings that have popped up, we showed the recent listings in Florida being more than the 10 largest states in New England, right? Combined.
Yeah.
We're seeing this pop up in Phoenix. We're seeing this now in the Dallas market. And so people, if they're wanting to sell their house, are going to have to come off their price significantly, which I find it ironic. I literally got my postcard in the mail yesterday, Chip. My valuation on my home went up 9% this year.
I got that love note too. Mine 9%. Went up significantly.
So that means they're going to increase my taxes 9% when the value of my home didn't go up. It actually went down and is going to go down over the next 12 months. So I would highly encourage every one of you that has the time to contest your property valuation statement you just got, Douglas or Sarpy County, Lancaster, doesn't matter. Go in there and fight because it's not realistic. How do we give these people an unconstitutional way to just keep raising your taxes arbitrarily by 9 or 10% when your value is actually going the other way? Anyway, that gets a whole nother rant.
Just anecdotally in conversations with people, my niece just bought a house for the first time, and one of my children is a homeowner. Others are kind of looking. They're young people trying to find a place that's
it's difficult for young people to afford houses,
it is,
for sure.
And that's my question. Is Omaha, Omaha, you've mentioned this before, Omaha tends to avoid the extremes, high or low.
Yeah, we're very well positioned to weather a recession, yes.
Okay, so it seems like the housing market here locally is still pretty strong.
Yeah, so I would tell you,
for the seller, I mean.
Yeah, so the mean price of a house here, you're probably safe. Even if we go through a deep recession, you might go down 3 to 5%. And if you're buying your house for shelter and to stay in it 5 to 7 years or longer, don't worry about it. Now, if you're trying to buy it to flip it, which people get excited, or we're going to buy this and fix it up and sell it next month, I would be really cautious in that regard. I own my home here. I own rental properties here, right? I own them in other states. We talk about that, and I have sold properties in the last year or so, seeing what's coming, and that's just because I have the ability to do it in a unique way, and I typically rarely will have to ever pay tax on any of those sales, et cetera. So just caution. But if you're a young person trying to buy a house for the first time, don't overspend, right? And buy the house. My advice to people is always when they're buying their first home, buy it envisioning that you're going to live there 5 to 7 years and then turn it into your first rental property. In other words, you're going to save up your down payment for your next house. Don't buy it as your forever home or the home you think you're going to permanently raise your family in. Buy it as an investment. Get your mindset right because it's a great long-term investment as long as you're willing to be long-term. Problem is job movers today, people job around, they switch jobs much more frequently than our generation did, and they may not be able to stay in that house. In that regard, you may be better off renting. If you know you're going to go in a career field and you're going to move to a city like Dallas and maybe try to get promoted out of there in 3 years or less, I would not purchase a home. I'd highly recommend you just rent and invest your extra capital.
David, you mentioned some places in the country, Florida and Texas and other places, the housing inventory is growing exponentially, was your term. Well, maybe that's reflected in this headline. This is the Daily Mail out of the United Kingdom. Realtors panic as buyers pull out of deals at near record levels. Market is crashing before our eyes.
Yeah, so we're having typically 15 to 20% of closings that are supposed to happen each month are no longer happening here throughout the U.S., so people are getting buyer's remorse before they close, right? They're getting a little nervous because, maybe if we back away, even if they lose a couple $1,000 deposit, they may be able to buy that house 30, 40, or 50,000 cheaper. Here in Omaha, like we talked about, if you're buying down in the, say, 200 to 400,000 range, you're not going to have massive changes. But everything above $500,000 here, we're seeing you have to come off the price 8, 10, 15%. We just had one. I walk my dog every morning through my neighborhood. I live in a neighborhood where the houses are typically 500 to $1 million or so. And I just saw one that went down 15% to get the deal closed from what they listed at about 4 months ago. The other thing we're seeing is listings that go stale is really skyrocketing. That's over 60 days, according to realtors. They call that a stale listing. If it doesn't sell in the first 60 days, it gets stale, and so you have to do a price drop to get attention back on your property or something, and so that's a concern. Again, if you have to sell, you may want to get out in front of that and just drop your price now to get a deal done. If you don't have to sell, you may want to pull it from the market.
with the hope that a year from now,
Yeah, if you
rosier
can sit and
conditions?
keep the house for 2.5 years or longer, you might want to hold on to it because the prices will be fine. But we're going to go through a little bit of typically the housing, when we roll through these cycles, it's about an 18-month cycle to get through the price, the valley, and get back to where we started from. So we'll measure that in future shows and future years. But if we started January of this year and we were to look at January next year and the year after that, you're probably not going to see a lot of change in the actual price of what the house is worth. Hey, if you're looking for more content like this, make sure you check out these videos and don't forget to like, subscribe, and ring the bell so you'll be notified when we publish more content that will help you retire smart. Thanks for watching.